Hello and welcome back, guys. So on today's video I'm going to be talking about structure and S&B. How can you use structure in accordance to supply and demand in the SMC way, for you to be able to trade like a professional trader, like a smart money trader. So some might say I cherry picked this area, but this is EURUSD and it's way back. It's like October 2020, and this is just for educational purposes, guys. If you apply and test this this knowledge that I'm giving you right now in real life in today's charts, it's exactly the same because the charts don't change. It's always been candlesticks and it will be that way. So what we're looking at here is EURUSD on the 4-hour, and this is like way back. So I'm gonna teach you on how to spot structural moves and use the S&Ds in those structural moves to trade from. So looking at this area right here, this is we have this let me drop this right here real quick there, and let's go back to auto. Okay, so we had this this short-term downtrend, right, where we had these this breaks of structure to the downside, where price just continued creating lower lows and lower highs, as you can see in these areas right here. So the minute price reached here, it failed to continue lower, right? And I'm gonna be explaining these as we go on. So when price reached here, it failed to break lower, and as a result it started going higher, creating a series of higher highs and higher lows. So we had this series of this was the higher high, and then this was the lower low, and lower highs now started being put into place, right? So there, boom, and then right here, just bear with me for a second here, and then this was the low, and then this was the high. So the minute price just came to break the structure right here, right, this was shit, my mouse is shaky. This right here was a clear indication that price had changed its direction. Other people may call it church, but I just simply refer them to breaks of structure. So once this structure here was broken, it means that price now had initiated a move to go higher. And as we can look into that, right, we had this break of structure right here, and then after the break of structure, what do we have within our structural moves, right? We have these S&D zones right here. Boom, the last down move before the up move started, and just look how price comes to beautifully respect it, right? So price comes, taps it, and there's your order. You just have to go to the lower time frames for confirmation, for those who use confirmation, but boom, there's your trade. Let's say you just had your stop loss below this low here, and your target was just right about there. So this is a 1 to 2 RR. So boom, right there, that's your trade, and it beautifully hits your take profit. And bear with me, let me tell you one thing, right? If structure gives you a structural play that clearly indicates that there's a change in direction, right, there's a change of character, that church thing, the ICT people call it that way. So if there is a change of character, right, the market has now changed its character from making a series of lower lows and lower highs into making higher highs and higher lows. So you're gonna be anticipating to hold that probably for a long term, but without risking yourself, right? So if if you have this trade and price has already taken this high here, right, you're obliged to close your position. Well, it's now up to you whether to close all of it or to close partial of it, maybe 50%, and put your break even into place and look to what, to hold this into what, higher target areas, right? And now bear with me for a second, it's not always gonna work. Nothing always works in this industry, right? Because all we are doing is trying to spot the actual right move without risking ourselves too much, right? We cannot control the direction of where the market is going. We can't do that. We're just fractions in this market. The big boys, however, are the ones who move the market into the direction which they want, and they always create liquidity and take it to increase the volume as well as volatility in the market. So that being said, let's go back to our knowledge. So okay, so that was your first trade there. Okay, so let's go. Price now creates this high. Let's just keep following price, right? Price creates this high, and now it comes to create this low. But mind this, where is this low created, right? Did it break our low? Boom, it did not. These are just wicks that came here, meaning that this is what we call absorption. If you don't know what absorption means, just go back to the previous videos that were posted in this same channel and look for that absorption and displacement video and watch it, then come back right here. So this is simply absorption, right? The smart money players are now just taking liquidity because they know that we retail or small traders have our stop losses here, so they're coming to grab this liquidity by taking us out and then shoot price up. As you can see, this is exactly what happens. Price comes, it takes people out, and then just look at this candle here. So the minute you spot this candle right here, as you can see, it barely has a wick on top. So it shows how much volume they put in this market, meaning that the big boys are now taking price higher strongly, leaving all these inefficiencies behind. And yet again, if you don't know what if inefficiencies are, go back and check the imbalances and mitigation video. So that being said, it means that you would have simply had a trade here right at the close of this candle, boom, protecting yourself up below the absorption area and targeting what, this high here, and that boom, that's another 1 to 2 RR. So you already have 4 RR within just 2 trades, looking based on how structure is going with S&Ds, because as you can see clearly, this is our last down move right before the up move. So you've just taken the trade above the demand zone and protected yourself just below the demand zone. Of course, you would have made this tighter and put this here, but it's all up to you on how you protect yourself, right? You're the risk manager of your own account, and yeah, we do not provide any financial advices rather than knowledge. So boom, so that was your second trade. And coming back now to see, okay, so we have our major structural play right here, which initiated the start of this uptrend, and then price now turns right from making higher highs and higher lows into making lower highs and lower lows. But why did it do this? Even if it's an uptrend, why is price making lower highs and lower lows in an uptrend? Price does this almost always, as I told you, because smart money are creating liquidity, right? This whole move here, right, this whole move here, there's bunch of retail that are looking to do what? To be buying from this area right here, right, following these highs or whatever. Retail are putting the trend lines just like this, saying okay, if it comes here sell, if it comes here sell, if it comes here buy. So boom, as you can see right there. So if retail are looking at this like some sort of channel, then the smart money are looking to take liquidity from these channels, right? So okay, that being said, let me just clear these because we're not really talking about these. Let me clear this, right? So why did price do this, right? Okay, boom. So price always does this, as I told you before, that if you, again, I'm just going to show you some structural play here, and if you don't understand it, just go back to the structure videos that were posted previously and check them out. So as I did say, that price doesn't always move in a clear trend like this, right? Price doesn't move like this. What price does in real life is that price will make a series of something like this, right? Something like this. This is what price does in real life. And what is this, right? This thing here, right here, it's an uptrend, right? Price from here to here, this is a clear uptrend, and this too is an uptrend, but this is an idealistic kind of uptrend that most retail are taught in terms of following channels and drawing trend lines below this to make life seem a hell lot easier and simpler than it is. But price doesn't actually move like this, unless otherwise everybody would just be a trader and that's it. But price in real life tends to do something like this, and when it's doing this, it means that it's creating liquidity points within all these lows right here, right? Price is simply creating this liquidity and then coming to grab this liquidity right here before what? Continuation. The same applies to what's happening here, right? So let me remove this. I hope you got that. If you didn't, then you can rewind and watch it again, right? So what price was doing here was creating these liquidity points, right? These liquidity points, coming to grab them, right? Ah, shit, what's my mouse shaky? Okay, let me reverse that a little bit. So okay, I'll just remove you if you don't mind. Boom. So what price was doing was creating these lows as liquidity points, and then comes to grab this liquidity with this move here before what? Before taking price higher. The same thing was happening in this overall thing here. Price created this low and this low as liquidity points, and then came to absorb this liquidity, take out all these stop losses that were just residing below here, and then do what? Take price higher. As you can see, price went higher. So this in itself can be spotted by a structural play that's like this, right? Let me show you something. Price tends to do something like this. Boom, and then boom, and then boom, then boom, and then boom, and then boom, 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 boom. It will go up, it will come and liquidate, and then what? Break, tests, boom, leave there. So this thing here is what happened here, right? If you take into consideration all this stuff, this series of higher highs and higher lows that were here, this consolidatory kind of move that was liquidated by this move, and then price went higher, meaning that this move right here was just coming to a deeper supply or demand zone that was down here, right? So let's say we had this, we had a zone here, right? Boom. So price comes and liquidate all this consolidation shit that's going on up here. All this becomes liquidated by this move, and then price now comes higher. Sorry for that dirty work, but it's just based on explanation. As you can see here, it's pretty vivid, right? And if we go back to our chart, the same thing happened, right? We have this series of higher high, higher low, higher high, higher low, higher high, higher low, higher high, right? This is the consolidatory shit that I was talking about, right? This right here. And then price comes to do what? Price comes and liquidates all of it. Boom, with this move, liquidates all these lows with this move, coming to make a retest to a deeper supply zone right here. This last down move before the up move right there, it absorbs it a little bit to clear out all the down traders that had their stop losses below this zone, right? Because we know that people who bought here, the stop losses will be here. So this tiny little wick here comes to take out these stop losses, and then look what price does, right? Price just flies higher and higher and higher. So this in itself is how structure and S&D can be used to determine where price is actually going, and going in both the short term and the long term. I mean, if we, I don't want to make this very long, but let's clear some shit here, and then let me give you a couple more examples. So boom, based on the smart money space as you know it, so this right here, as we can see, is what? It's a breakout structure, right? It's a breakout structure to the top side, and what we are waiting for is that pullback to a certain demand zone that's residing below there, and lo and behold, boom, you have your demand zone right here, this hidden S&D zone right there. So let me just put this intact. Now boom, right there. So price comes, did it really tap it? Boom, price taps it, as you can see with this, price taps it. So that's your trade right here. Took the fib thing, so this is our long position. Boom, your stop loss is where? Just below that zone. Your first target is where? Is at that high, and lo and behold, what I told you previously, right? You can whether choose to hold this towards what? Higher areas, long-term areas, and you could have held this trade from here to here, and probably even all the way up there if you're a patient trader, right? But if you just wanted to close at this target area, I mean your first target, it's all up to you. I mean, you're the one who's managing your account, you're responsible for everything that you do, right? So there, this is an example of how we integrate these two things to make the best out of these charts: structure and supply and demand, of course. So these two things are the key things that you, as a trader, as a beginner trader, as an intermediate trader, as a pro trader, I mean, they're just way too essential. So I hope you've got something out of this video. And by the way, don't forget to hit that thumbs up, click this the subscribe button if you haven't, turn that bell on, and until the next time guys, peace.